The trailing stop loss I set yesterday kicked in and produced a very nice profit. As we see on the screen, I set the trailing stop loss and I profited $1.94 off of a $10 position. That's roughly 19%. Not bad. Could it be better? Maybe, but it doesn't matter. The thing about the trailing stop loss is I set it 15 pips away from the current price, which means in order for it to hit the price I got, the profit actually went up as high as $2.14. So realistically, I lost money. At least that's what a lot of the YouTube gurus will tell you. The truth is, the phrase for this is called chasing profits. Never, ever chase profits. You will always lose. You will never ever get the highest profit a trade could have made. The fact that I made $1.94 when my profit minimum was $1.50 means I gained 44 cents more than I expected. That is a wonderful little surprise, and one that adds nicely to my total balance. The biggest, most dangerous mental trap in trading is chasing profits. Because once you get into that trap, it becomes an issue of what if I didn't set my trailing stop as close? What if I gave it more room to breathe? I could have made more money. That kind of thinking is dangerous. It is very dangerous. Whenever you have a trade and you make a profit, be grateful for the profit because you've done better than 90% of everybody else on the market. 90% of people lose money because they don't pay attention to the details or they're not grateful for the fact that they made a profit. The truth is about trading, and this is something that goes misrepresented constantly. If you have a budget of $1,000, the proper risk management strategy is 1% position size, or $10. So on a $10 position, the standard recognized profit of a $10 position is 1% to 2%. That means basically 10 cents. I made $1.94 on what would normally be a 10-cent profit expectation. This is proper risk management, proper analysis, proper account protection. So, versus 1% to 19%, I'll take it. I'll be glad I got it because, quite frankly, this is my normal expectation. Nothing more. But this is the truth about trading. You don't make money off of a $1,000 account that's going to grow into hundreds of thousands of dollars without irresponsible methods. If you trade responsibly, with proper risk management, with proper control and restraint, then you have a clear path. And when you get to situations like what this particular position did, $1.94, 19%. That's right, 19% profit on an expectation of only 1%. Take it, put it in the bank, walk away, be happy, go to the next trade. It's that simple. Even if this was only a 10% profit, be grateful, move on to the next trade. Never, ever, under any circumstances, chase profit. It will destroy you. It will destroy your confidence in trading. It will destroy your portfolio. It will destroy your account. And it will eventually rob you of your money. Don't let yourself get into that trap. No matter what anybody says. If you've made a profit, it's a good day. You've beaten 90% of everybody else in the market. So now that we have that, let's look at the chart and figure out what are we going to do next. Now this is a live market. It's on a Friday. In a few hours, the market is going to be closed. We can clearly see where the market has been. We can clearly see what has been going on over the last day. And it's this candle right here that we are looking at. It looks like an upside down hammer, and we can clearly see that the market is going downwards between yesterday and today. But if we go back a little further, if we zoom out and we get a better perspective of the market, we can see that overall the market for the last month or so has been going downward. We have had a downward market, and prior to that, we had an upward market. How far will it go down? Nobody knows. And all the magic lines on your chart aren't going to matter when the market does what it does. Especially if you are only dealing with a $10 position. If you have a position size of $100,000, the market might care. But for the average individual trader, the market isn't going to care about you, and it's going to do what it wants. So with that realization, and as we look at the market, we can clearly see that the market has some boundaries that have been accepted by buyers and sellers. For example, we can clearly see that this range seems to be the lower shelf or support of the current position. Prices haven't gone down to that area. We can see they've gotten close, but they haven't gone down to it. We can even see that way back here on early March, the prices were there. But we're not back to the early March prices yet, because price hasn't gotten down to this level. When price gets down to this level, then it will retest the area, and buyers and sellers will decide on whether or not they want to maintain the structure versus allowing prices to go further. Now, when I talk about buyers and sellers, I'm talking about the aggregate of hundreds of millions of people on the market, all trading this one asset. Their purchases and their sales, creating an aggregated complex of buying and selling in such a way that it's like a tug of war. So when you look at these candles and you look at how they are shaped, really you should be looking at them sideways, with the buyers on one side and the sellers on the other side, and watching the little flag go back and forth as they fight it out as to who is going to control the market next. Right now, we see today's market with the red candle that the sellers are in charge, pushing price lower. Now we've seen a couple of days ago that the buyers were in charge. But this is the dynamic of the market that exists. And this is why lazy trading is always a good way of going. You walk away with nice little profits that you didn't expect. And you aren't stressed trying to figure out what tens of thousands of people looking at the very same candle you are trying to do. It is a reality that has a functionality and a purpose. That functionality and purpose becomes clearer when you look at different time frames. When you look at the market through different perspectives, we can see that overall, from the last several months, we have been in an uptrend. Price has been climbing. It has been climbing towards the upper boundary of the range that we have been watching for a very long time. Will it make it there? Who knows? We can see from what this shows right now that currently it looks like it might be getting ready to turn around. But again, you can see that here, all of the red candles on the chart show the possibility of maybe the market might be ready to turn around. But it hasn't yet. Don't try to predict the market. It's not something that's realistic. Simply accept the market. Accept what it is doing, and then simply make decisions based upon that market. Whether or not you're right or wrong doesn't matter if you follow proper risk management, because you will always have plenty of time and plenty of ways to address the situation. Whether it's deliberately getting out of a position at a loss or adding to your position through a second or third or fourth position. Your overall accumulation will dynamically change based upon what you are looking at. So from that standpoint, let's go back to the daily chart and figure out what we want to do for our next trade. Where do we want to put the trade, if we want to put one at all? That's one of the biggest questions that becomes a pivotal point. Let's zoom out a little so we get the perspective that we need to make the decisions. Now, we have put several trades in this area already, and they've done very profitable, even using this area here for the last trade that brought the $1.94 profit. So we have a couple of areas that we can see where profit is going to go. So when we do our entry order or our market order, we have ways of looking at what the market is doing. Ways of telling when we want to get into the market in a responsive and responsible way. And by the way, if you like this kind of video, please give it a thumbs up. Okay, so let's look at it. We see the market. We see how it's gone downwards. We see how it went upwards in the beginning of the week. But we see how this week is actually lower than last week. And that was lower than the week before. So we see this stair-step cascade as the market continues downward. So I personally think the market shows a strong statistical probability of continuing downward. So I'm going to go and open an order. And I'm going to go with 441 units. And now I'm going to drag the order where I want. Just above today's upper wick. I could go above that, back up to this wick, but I don't think the market is necessarily going to go there. Based upon what I see from this week, I don't believe the market will go that high. It may not, it doesn't matter. Here is where I'm going to place my trade. And I'm going to have to change it to 442 units. Remember the FIFO rule. You cannot have units of the same size and be able to sell them individually. First in, first out. So we're going to go with 442 units. I've got my entry order. I'm not setting a take profit. I'm not setting a trailing. I'm simply going to let it sit and float right now. So, clicking on submit, I am now submitting my entry order, and there it is. It shows up on the screen, and now I have a position in the waiting. If it triggers next week, that will be great. If it doesn't, that's fine too. Every day we look at the chart, we make decisions. And those decisions are on the basis of where and what we want to do. If the market is just in a state that we don't feel comfortable with, we don't get in it that day. Or we do nothing and let the positions we have do what they need to do. Don't think you need to place a trade every day. You don't. This goes back to the very first rule that I talked about several videos ago. Never buy without a purpose. When you get into the market, think about why you want in the market. For example, looking at the chart, why I want in the market at the position on the chart for my entry order. It's because I've already had 2 successful trades in this region. This strategy has worked twice, and both times have been quite profitable. So it's reasonable that a third time may also be quite profitable. It's also reasonable that the market can turn against me and I will simply have a second position. And since I have a maximum of 10 positions for my own risk assessment, I'm still good. But this is the thinking you must work through every single trade. The more trades you take, the closer you get to your maximum limits, the more you need to think about why you need to be in it. What in the market makes you understand a potential of profitability. Every action must be with the intent of preserving your balance and protecting your capital. First and foremost, your second objective is then, will this trade become a profit? And if the market doesn't suggest that potentiality, don't get into it. Now, looking at the market right now, if it does fully go against me, meaning the market goes upwards, I can already see that this level may very well be a stopping point. So I could easily put another order there just in case to capture that momentum. Because at some point, the bears or sellers are going to become exhausted. And we can already see, just by looking at the chart, with this green candle here, if the bears become exhausted and the bulls or buyers become aggressive, then we can easily see a massive spike in price. So it might be worth considering putting an order there as well. And in fact, I think I'm going to do just that. So 443. Again, remember the first in, first out regulation. And now that I have that, I'm going to put my market right there. Maybe just a little above. There we go. Now I'm going to submit it. So now I have 2 entry orders based upon what I think could potentially happen next week. I think sometime next week the sellers are going to become tired and exhausted, and the buyers are going to take over, and we are going to see another huge, monstrous green candle. And when these candles hit, these orders are going to trigger, and I'm going to get into the market at these points. But the profitability that is going to come from these orders are going to be what I've seen already previously. A nice, comfortable, and healthy profit well above my expectations. If you like this kind of content, please let me know. Leave a comment, share your thoughts. Let me know how your trading is going with this kind of technique if you're using it. If you're not using it, but you're looking at it, please ask questions. Thank you for watching.